So, good afternoon. Oh, no, it's not even before lunch. So, I think you know Sage as a high-tech company, but today I want to tell you a little bit more about Sage as an investor. As you know, Sage is a British software company with the market capitalization of something like £7 billion. But what you may not know is that in the last 20 years, Sage acquired approximately 54 companies all around the world. And we bought the companies with the cash flow, we bought the company at the early stage, startups without the cash flow, startups with the brilliant ideas. So only this year, we acquired 3 different companies, and our last acquisition was in the United States, approximately 850 million US dollars. So we are not the venture capital. We are investor. We are sector investor. And I think there is a big problems for the companies, big companies like Sage, although, not big companies are saying about this. If you look at big companies, a big problem just to create innovation. Because they are big, they have a processes, they lose certain flexibility. So they need to look around just to acquire innovation. That's the one thing. The second thing, they are capable of doing innovation themselves, but the cost is too high. Therefore, they are looking for the startups. So let me share with you the experience from the Polish market. Normally, I ask the organizers what would be the most interesting things. And they told me, Piotr, tell them about the things you failed. That would be cool and interesting. So today, I will tell you about our failure. Actually, just a year ago, we targeted one of the Polish startups. And we thought that would be quite a pretty easy deal. Cloud solution, interesting, cool, and sexy. We didn't have customers, so we thought, perfect match. So we started engaging into negotiations. That's a question what will happen with them after acquisition, whether they can continue to develop, because with the sector investment shut down. That's the risk. But we were not this kind. So we discussed with them, how we can acquire them. Of course, there was many things they objected, but finally we reached the final agreement. We met for lunch, and then after lunch we were supposed to sign the agreement. And apparently, my colleague flew from London just to help me out with some administration stuff. And after the lunch, apparently, a price increase, 40%. What a surprise. So I asked for a break. I talked to Dirk, my friend, say, so something fishy here, They are not going to sell. I said, no, maybe we can, negotiate that. And I say, no, it's something fundamental. So how can we test it? I mean, don't try it yourself if you are a sector investor. I told him, whatever there is a price, we say yes. If they agree, then I will say I'm insane, and then we'll step back. But I'm telling you, they will say they are not going to buy, to sell. What happened? We came back after the break. We sat with them. They said the price, which was completely out of the moon. And we say, yes, there's only one condition. You sign it now. And guess what happened? Didn't sell. Didn't sell. The price, we met absolutely all what they wanted. It was like for them like a Christmas Eve, You got all the presents you wanted. Nothing. So I asked them, what's the reason? Just tell me what's the reason. And they told me, Piotr, there's one big thing. We don't know what to do with our lives. Guys, so I want to tell you that if you create your baby, your startup, think about the exit. What is your time horizon? Is it 5 years, 2 years? Why do you need investor? It's very important. Otherwise, you will pursue the exit option, but you feel at your heart that you don't want to do this. So it's very important. You can go to the venture capitalist. I have a couple of friends here around MCI with Tomasz. You can talk to him. That's the way forward. You can build organically, go to the stock exchange, make IPO, and still keep the control. Or you can go to the guys like Sage, your sector investor, and start talking to them. Why we failed? There was no trust. There's no trust. Simply, very simple thing, like a trust, completely ruin this transaction. So our lesson learned, both for the investors like us, but for the startup is, get engaged into the project. The companies like Sage, big software, high-tech company, need startup. They need startup. And for startup, it's also very important because you have extra cash flow. So don't be shy. Contact people, companies like Sage. They will meet with you. They will discuss with you. You have to remember that 30% of the companies failed within first year. 70% don't live longer than 3 years. So there is quite a big death ratio after the startup. And the second thing, as a big question, how much you want to charge for your baby, for your startup? That's very important. Also, on the other hand, if you don't want to go to the venture capitalist, if you don't think about the IPO because you don't have a cash flow, you have to know how to value your business. Because the normal, traditional way of valuing innovation really don't apply here. For the companies like Sage, which are like sector investors, it's also very difficult. Although we have experience, 54 companies, $1 billion invested. Don't ask me how much was returned, so it's confidential, but invested, spent, gone. And then when you engage with the project, then you get the money. You can self-finance your development. On the other hand, if you wisely select the sector investors, they will show you how you can commercialize your idea. They may not be perfect match in the sense that you may ask yourself, is it going to develop just to push forward my product? May not necessarily be the case, but you will earn some money in order just to pursue your core idea by doing something a little bit aside, something which don't really contradict your strategy, but gives you commercialization. Don't worry, the companies like Sage, we are big companies, we wear suits. Instead of using, iPad, I'm use, paper and a pen. We are a little bit, conventional. We need a little bit this fresh air which is coming from outside. But of course, be careful. Because, sometimes you may have a wolf. In a sense, they will buy you and shut down the product because you may be too big competition for them. So it's not straightforward. But my advice to you, after certain years is as sector investors, big high-tech company, is just there is a way. Get involved into the project. Contact sector investors. Start talking to them. That will help you a lot just to develop your product, your baby. But also think when there is a good time for you to exit. Do you want to exit? Do you want to pursue to IPO? That's very, very, very important. Because if you engage like in the case which I explained to you, then you lose the trust also with such an attempt. It will be very difficult just to come back to the table and start negotiations again. So you have to really think what would be good time, what's your idea, when you want to exit, how much money you want to make, and what you will do with the money. That's also important. When you come back home, tell your partner, I got this this suitcase full of money, and then, honey, what will I do next? That's also an important question about your life. So that's my advice. If you wish to discuss, with some of my colleagues, my friends, they are conventional. We wear this, green little thing. I don't know what's the Polish name. It's a poszetka or something like that. You can talk to them about the technology, about the innovation, because that's the core of our NDA. So I wish to share with you, my experience. I hope I was able just to a little bit show you the other perspective of conventional business. So thank you very much. enjoy impact. Thank you.